Hello there everyone, today's video is all about mileage claims and reimbursements and claiming for business mileage when you are using your own car, not a company car. So let's kick off and talk about the actual mileage rates. And I think many people are familiar with this mileage rate, HMRC's authorised mileage rates, which say that you can be reimbursed by your employer up to 45p a mile for the first 10,000 miles and then 25p a mile thereafter. So, just looking at the example, 45p a mile. Let's assume someone does 10,000 miles and the employer only reimburses the employee, let's say 35 pence. So there's a 10p shortfall. So HMRC say you can pay up to 45, but the employer, for whatever reason, has said we're only going to pay 35. What does the employee do? Well, the difference between the authorised rates, 45p, and what they actually receive, 35p, 10 pence, multiplied by the number of business miles, 10,000 times 10p, is £1,000. So that £1,000 they claim as a deduction on their tax return, assuming they do a tax return. If they don't do a tax return, it's a standalone form that they can fill in and send it to HMRC. But assuming they've got a tax return, it would go in the employment section as a business expense, in the employment section of the tax return, the expense, and that £1,000 reduces their taxable income. So if this person is a 40% taxpayer, that's going to save them £400. If they're a basic rate taxpayer, 20%, that's going to save them £200. So it's not as good as the employer just being more generous and saying, here you go, I'll give you the full amount according to HMRC's rate. Because obviously, if the employer had paid them another 10p more to match HMRC's 45p a mile, the employee would be £1,000 better off. But claiming it through the tax return is the next best thing. They're either £400 better off or £200 better off. But it's still some way short of being £1,000 better off. So in all cases, it's better if the employer have a quiet word with the employer and say, look, come on, get with the program and just pay me, please, what HMRC say is their authorised rate. Obviously, the employer might tell you where to go, but you are always going to be better off if the employer matches the HMRC rate rather than claiming the extra as a deduction, because of course you're just getting it at your rate rather than the actual full cash amount. So if you are both the employee and employer, as it were, you are director shareholder of your own business, then obviously you'd manipulate this to always match the 45p. Why on earth would you pay yourself only 35p if you were the boss? You would always do this, because what is the point of covering the shortfall of the tax return? Like I said, it doesn't work out as well, so you'd pay yourself the full whack. So, and I think many people are familiar with this, but the second part of this video, which I don't think many people are familiar with, is the actual miles travelled themselves. So this is all about the rate, the magical 45p a mile. Second bit, all about the miles. So what counts as business miles in your car that you use for business purposes? So let's have a look at this. Home. Employee lives here. They drive to work to the HQ. That is regular commuting. So as I think many people are familiar with, no reimbursement, no tax deduction for regular commuting. You just got to stump up the cost. But let's assume now that this employee goes to work and they go off and see a client over here, which is 10 miles away from the office, 10 miles that away, further away from where they live. And let's say it's the final appointment of the day. So after they've been to see this client, 10 miles away from the office, they drive back to home, which is, let's say, 20 miles, okay? Now, I think intuitively people would think, okay, so when they are working out the mileage to claim from their employer, this is a business trip from HQ to the client, 10 miles, and then back to the office is another 10 miles. So that's 20 miles for that trip. However, it's better than that, because HMRC say that if this visit to the client is either at the start or the end of the working day, then this leg here, the homeward bound leg, is also claimable. So you can claim for the 20 miles to get back to home, not just the 10 miles back to the office, even though you're not going to the office. But people might think, well, that's what I can claim, 10 and 10. No, if it's your last port of call of the day, or indeed the first, you can claim 10 plus the 20. So 30 miles for that trip when you might have thought you could only claim 20. So a power tip there on mileage claims if you are in that situation. Now remember, it only works if it's the first or the last trip, business trip of the day. But it's just a way to get additional expenses paid, which is all per HMRC's guidance. But I suspect a lot of people will not know that, and when they come to do their mileage claims, they'll just go 10 miles, 10 by 2 is 20, and not know about this final leg adjustment, as it were. So just an overview there on mileage claims, mileage reimbursements. This bit, the rates, I think most people are familiar with. Now, obviously, if you can manipulate how much you are paid because you are both the employee and the employer, you would always choose to max out the 45p. You would never pay yourself any less. If you're an employee and you can't have any say on what the employer gives you, you could give them a gentle nudge perhaps and explain. If they say, oh, but don't worry, you can claim the difference back on your tax return. Well, yes, you can, but it doesn't work out as well. It's not a one-for-one difference. Like I've just shown, that £1,000 comes off your taxable income, so you only really save 200 or 400 quid. You don't get the 1,000 like you could if they were just basically more generous and gave you more. And then, of course, on this one, all about logging the mileage in the right way. So if you like this video, please do subscribe, and as always, I'll see you soon.